How do you make $10,000 plus a year in stocks? Let me take you through my tips on how you can actually do this, how you can achieve this, okay? First thing I want to do is just kind of open up your mind. Think about percentages for a moment, okay? If you have $100,000 invested in a portfolio, and on that $100,000, let's say you get a 10% return, okay? You're already at $10,000 made. On a $100,000 portfolio, 10% is like nothing crazy at all. Like that's not something special. That's no special return or something like that. Check what we've gotten in the public account over the past year. This is going to blow your mind. This is calculated by Fidelity Investments here on the public account. Everybody in my private stock group gets to see every single stock I buy and sell in here every single week, right? We've gotten a 57% return versus S&P 500. It's at about 15%. Now, not every year is going to return 57%, but it definitely shows you and opens up your mind to like 10% a year is nothing crazy or nothing special. If we think about it in terms of 20%, if you have a $50,000 portfolio and you get 20%, which is a good return, but that's not like, oh, no one's ever gotten that before. You're already at $10,000 on a $50,000 portfolio at a 20% return, right? Now, the next thing is, how do you get to a place where you can have $50,000 invested, $100,000 invested, right? Well, that really comes down to more income than expenses. Every single person watching this, you've got to make sure, by the way, if you're enjoying this, make sure you hit a thumbs up. You've got to have more income than expenses on a monthly basis, if not on an every 2-week basis. So you're always able to put in money to your portfolio, build your portfolio, acquire stocks, right? And then don't get scared during the crashes and the corrections. It's the best buying opportunity. Ask any investor who's ever been in the market. They will tell you the best buying opportunities you'll get in your life, the biggest gift you'll ever get, is during crashes and corrections. I don't care if we're talking great financial crisis. I don't care if we're talking the Great Depression. I don't care if you're talking about the crashes of the 70s and the 80s. I don't care if you're talking about 1987. I don't care if you're talking about the tech bubble blow up. I don't care if we're talking about 2020, the Rona crash. I don't care if we're talking about 2022. It's always the best buying opportunities. Let me show you a little bit about the numbers. See this man right here? He's doing the trash. All he's got to focus on is more income than expenses and the numbers, and he'll build a very, very nice net worth over time, okay? So when you're looking at a stock, you really want to look at the forward PE there. Is a forward PE roughly in line with where the market in general is at? Okay, so somebody like a Meta is, but then you want to focus on growth. What about expected growth for this company? Double-digit grower at roughly a market multiple or slightly above, that's an undervalued stock. Then you also want to look at the charts in regards to a stock. You want to be able to look over a company. Is this company on a growth path overall? How's their margins looking, their earnings per share? I go all in depth, teach you all this stuff inside my private stock group. Now, if you enjoyed this little short clip here, you'll definitely enjoy this 41-minute beast video, how to make $100,000 plus a year from stocks in 6 steps. You might also enjoy this one, 3 grade A stocks you must buy. Enjoy, much love, subscribe.